And welcome to Business Incorporated live on Channels Television. We see the global markets moving along. Here are the stories you should be looking at. Bank of Ghana hints at more interest rate cuts after the bumper cut yesterday. Borrowers may breathe easier as policy easing looms. And data from Oxfam shows Kenya ranks high on extreme poverty as 125 richest hold more wealth than 43 million citizens. And this week, Bitcoin gets a breather, holding at 90,000 level. It's good to have you join us. I'm Ladi Williams. Let's get a quick check on what's playing out with the markets now. Seeing oil prices, inching up today on expectations of Ukraine-Russia ceasefire, which would pave the way for unwinding of Western sanctions against Russian supply, though trading was set to remain thin due to U.S. Thanksgiving holiday. So we see Brent there managing to get back to that $63 level, just 8 basis points up. WTI still below $60 per barrel, 0.26% up at $58.80 a barrel. Both contracts settled about 1% higher on Wednesday as investors, they assess oversupply risk and the prospects of a Russia-Ukraine peace deal. U.S. envoy Steve Witkoff is set to travel to Moscow next week with other senior U.S. officials for talks with Russian leaders on a possible plan to end the nearly 4-year-old war in Ukraine, the deadliest in Europe since World War II. Still, Russia will make no big concessions on a peace plan. That's according to a senior Russian diplomat. Let's get a quick check on what's playing out with metals now. For the metals market, yesterday we did see big moves up, but today it's a different picture. $4,154 per ounce. That's for spot gold down 0.2%. And yes, spot silver, that was shining more yesterday. It's down about 0.9%, $52.89 per ounce. And we see platinum. That's the lone gainer with the market with metals that we track. $1,611 per ounce, 1.4% up. Palladium, not looking so good, $1,409, down 0.9%. Conflicting signals on the timing and magnitude of a rate cut. That's accelerated so far. So investors are trying to, get direction. There's so much uncertainty out there, and that's why we're seeing the mixed sentiment right there in the metals market. Let's get a check now on what's playing out with that's in West Africa now. It's still about rate hikes and rate cuts at this point. And we see the Bank of Ghana, they trimmed their policy interest rate from 21.5% to 18%, signaling major easing in the cost of borrowing. That's the second sizable cut this year. At the same time, forward guidance, the central bank announced it will revive the 14-day Treasury bill as its main liquidity management tool, replacing the previously dominant 91-day instruments there. So a big cut right there in Ghana for interest rates. Taking on to North Africa now, the Egyptian economy surged in the first quarter of fiscal 2025-2026 calendar, with growth accelerating to 5.3%, the fastest pace recorded in more than 3 years. Driving jump, a strong rebound in private sector investment, a double-digit expansion in non-oil manufacturing, and vibrant growth in tourism and ICT, underscoring the success of structural reforms and renewed investor confidence. And bringing it back here to capital market regulation, Securities and Exchange Commission, they've issued a directive requiring all capital market operators, CMOs, to declare their level of compliance with the Investments and Securities Act, that's ISA 2025, and ensure that tradable instruments in their portfolios are fully registered by January 2026. The announcement was delivered by the SEC Director General, Dr. Momotimi Agama, through the Commissioner of Operations, Bola Ajamale, during the 2025 Journalists Academy held in Lagos yesterday. And definitely countdown to T+2 tomorrow. Take a listen.
It addresses, the ISA also addresses mergers. By removing merger control provisions and focusing the SEC's oversight on fairness reviews, the Act eliminates duplication with the Federal Competition and Consumer Protection Commission, FCCPC. It ensures that public company transactions are fair, transparent, and protective of minority interests. It's a more efficient model and aligns Nigeria with jurisdictions where securities regulators focus on investor fairness and not competition policy. So the ISA increases the membership. Okay, so on another side, it increases the membership of the Investment and Securities Tribunal to 12 and strengthens that institution, its capacity. This enhancement will improve the speed of capital market dispute resolution and strengthen the rule of law in the sector.
All right, return to one issue quietly draining billions from Nigeria's economy: insecurity. From the northwest to the middle belt, our farms are empty, rural markets are collapsing, and food inflation is being driven not by diesel or FX, but by fear. Banditry has evolved into a parallel economy, and without security or rule of law, Nigeria cannot attract the investment it desperately needs. So we ask the critical question: is insecurity now Nigeria's biggest economic policy failure? Joining me now is Dr. Paul Onu, a senior lecturer, Department of Political Science, UNN. Great to have you on the show, sir. Yeah, you might have to unmute, Doctor. Well, so let's look at it from food security.
Thank you. I'm happy to be with you. Thank you. I'm happy to be with you.
Okay, let's look at it from food security. All right, let's. Okay, Prof, I can't really hear you well, but can you hear me?
Yes, I can hear you.
Okay, so first off, looking at the situation right now in the Middle Belt and major food producing areas in Nigeria, do you think Nigeria can truly achieve food security without first achieving physical security in the Northwest and Middle Belt, in your opinion?
So basically that's the $1 million question that is on everybody's mind. Nigeria is currently divided by very few insecurity challenges as we all know. Nigeria is predominantly an agrarian society, and particularly in the Middle Belt.
All right. We'll try and get Dr. Paul Onu better. The audio is not sounding so good now. I'm sure there's some internet interference there. Dr. Paul Onu, we'll try and get back to you to finish up this conversation. We'll get back to him now, but let's look at other stories at this point. We're still seeing big stories coming out also from Kenya. A new report from Oxfam, that's Oxfam, Kenya, paints a stark picture of deepening inequality in Kenya. Just 125 of the country's richest individuals now control more wealth than roughly 43 million people. That's about 77% of the population. Despite a decade of what on paper appears as solid economic growth, nearly half of Kenyans survive on less than 130 Kenyan shillings per day, underscoring a grim divergence between macroeconomic indicators and lived reality for millions. According to the report, extreme poverty has surged, with about 7 million more people slipping below the poverty line since 2015, even as inflation and soaring food prices exacerbate hardship for low-income households. So that's the recent data there showing the huge gap between the rich and the poor in Kenya. All right, let's look at commodities. Market update now. We see diamonds have long been symbolized as luxury, romance, and lasting value. But the global diamond market is facing new dynamics, from the rise of synthetic alternatives to producer nations seeking greater control. The industry is at a turning point, and its place as a store of wealth is being questioned this time. Let's talk to Toju Megasin now. He's an analyst, financial derivatives company. Great to have you, Toju. So, with the synthetic diamonds becoming more affordable and ethically appealing, how do you see their growing acceptance, affecting the price and supply, of natural diamonds?
Good afternoon, Ali. Thanks for having me. Yes, in recent time, we've seen a growth in acceptance of synthetic diamonds, otherwise known as lab-grown diamonds. As they're actually 85% cheaper than natural diamonds, with their prices ranging between $700 to $1,650 per carat. So this has obviously attributed to a 15% reduction in the price of natural diamonds over time. Sorry, excuse me. But yes, so for more context, in past year, in 2024, 50% of engagement rings in the US that were purchased were actually synthetic diamonds. So obviously, for that being said, like compared to 2018, that percentage was actually 2%. So obviously the drastic increase you can imagine was a lot. That being said as well, I would expect to see an increase in the supply of synthetic diamonds. They're actually more scalable in production. And on the other hand, I expect to see a further decline in the price of natural diamonds due to oversupply.
All right, so we see Botswana and Angola negotiating for greater influence over the company, the Bears, challenging its historic dominance. What impact could this shift in, control, have on the global diamond market and, potential, monopolistic risk?
Yeah, so this break in control, I feel, would bring about more transparency and bring about a fair revenue for producers. Alongside this, I feel a greater producer influence would lead to more and would encourage more sustainable and ethical practices that align with the nation itself. So this would lead to governments. So this would lead to, I would feel like that practices would lead to. So this would lead to greater. Just lost my. This would lead to greater practices and ethical practices in general. And lastly, I'd like to say that I feel like there's a growing trend within African countries whereby nations are feeling they can take full and more advantage of the natural resources value rather than just being passive suppliers to international orders or international.
All right, Toju, thank you so much. We'll keep tracking how it all plays out in that global diamond trade there. Thank you so much for coming on today.
Thank you very much for having me.
All right, let's get a check now. What's playing out with markets that we track? See, trading on the African continent, we've seen 142,000. That's the level right there for the NGX. So I guess there's no let off here, from the bears. 0.17% down at intraday, losing the 143,000 level. We did see that breather after the monetary policy held rates at the last meeting of 2025, but that did not continue at this point. So it's still very bearish sentiment from last week into this week. Johannesburg Stock Exchange, 0.71% down, 111,000. So we're seeing a drop there, even though it was quite bullish for the Johannesburg Stock Exchange yesterday. Could it be on the Trump story today, invitation to G20? That's in the U.S. We did hear from Trump on Truth Social. So maybe that's a reaction to that, maybe. Let's get a check on other markets now. The EGX 30, that's looking better there, trying to get back above the 40,000 level, 0.99% up, about 1% up. Nairobi Stock Exchange closing in the green yesterday. Maybe another chance to get to another high. That's for the NSI right there in Nairobi. All right, so the other regions we track now, we're seeing the UAE. It's a different picture, a mixed picture in the UAE. Dubai index 0.17% up. Meanwhile, we see the Abu Dhabi index 0.24% down at 9,712 points. Tadawul in the green, 0.35%. So it's mixed across the Gulf region. Qatari index down 0.42%, 10,644 points now. Move over to U.S. markets now. There's the futures market in the U.S. The rose, allowing major averages to log their fourth straight day of gains ahead of Thanksgiving holiday in the U.S. So we're seeing positive sentiment right there. The Dow Jones Industrial Average futures 0.67% up. S&P futures 0.69%, and the tech-heavy NASDAQ 0.82%. That's for the futures market. Giving us direction on what to expect for the closed market. The broader markets gains were boosted by artificial intelligence player Oracle, which jumped around 4% after Deutsche Bank reaffirmed its bullish stance on the name. NVIDIA shares, moved up more than 1%, recovering from a recent, pullback there, while fellow Magnificent Seven member Microsoft traded almost 2% higher. So we're seeing that, fill into the futures market today. Let's get a check now on other parts now in Asia. We see for Asia markets, let's kick off with, yes, they did close in the green there. Nikkei, that's Nikkei, 1.23% to close, a big jump there. Most of these markets did very bad last week, but we're seeing that, recovery, this week. We'll see if that continues, going forward. Kospi, 0.66% up. The Hang Seng Index, that's about 7 basis points up to close. Let's go to other parts now for India. We're seeing India, they hit a record, most of the markets there, as Asia-Pacific markets track, Wall Street, the Nifty 50, just about 4 basis points to close, 26,215 points. Not looking so bad there at the Shanghai Composite, 0.29%, 3,875 points there. And, definitely we're seeing that bullish sentiment continue, and we'll see if the TGIF trade, holds on at this point. Well, let's bring in Vada Imrak now to get a check on what's playing out in Europe. Great to have you, Vada. Let's turn to European markets first. What's playing out there today?
Hi, Laddie. Happy to be here. Shares in Europe were muted. Investors are taking a little bit of a pause after 3 sessions of gains. And this was pegged to hopes of a U.S. interest rate cut, but we're not sure if that's going to come about soon. But what was striking today in Europe's stocks was Puma. Puma's shares surged on rumors that Chinese sportswear company Anta Sports is among the firms considering a potential takeover. And just this news, these rumors, they could be more than just rumors. They were also posted in big media names. As a result of this, Puma's share price soared by 14.6% this morning. And DAX is also in the green with very slight gains at 0.2%. The pan-European index is not as optimistic, with both Euro Stoxx 50 and Stoxx 600 flat.
All right, let's talk about another big story now. The IMF published an assessment of the German economy. Vada, tell us what the prediction for Europe's biggest economy is.
Well, in a nutshell, the IMF predicted economic recovery and growth for Germany that's going to be powered by this landmark reform of the debt brake. It's something we've talked about often, how Germany is going to increase its spending in infrastructure and defense. This spending will spark the economy's recovery. That's what the IMF says. However, this will take a long time, and this will show in the long term. But in the medium term, the picture remains quite gloomy. Germany's rapidly aging population and a drop in productivity are still hindering growth. The IMF also said something interesting. They said that in the second half of 2024, Germany's economy was kind of on its way to recovery, but trade issues and Trump's tariffs this year have really stunted that growth. So Germany's GDP is only set to grow by 0.2% this year.
And how is the mood among businesses in Germany?
Well, to be honest, not good. In fact, the mood is actually quite sour, and I'll tell you why I know this. This week, the German Family Business Association, which is an organization that represents family-owned businesses, said that they're going to lift a ban on contact or working with the far-right AfD party. Now, you might be wondering, why is this a big deal? Well, most parties and businesses have agreed not to work with the far-right, and with this kind of blockade, they were able to ensure that far-right policies don't influence business. But with the lifting of this ban for the Family Businesses Association, it shows that working with the far right, if it works for businesses, isn't out of the question here anymore. And that's a new thing here and could be setting a dangerous precedent.
All right, thank you so much, Vada, for giving us the update there. We'll get a TGIF trade tomorrow. Thank you.
Thanks.
All right, let's get a check on what's playing out with digital assets at this point. I did, talk about Bitcoin, having that recovery, generally following what we're seeing with global indexes at this point, $91,208. I guess investors were worried at some point if 90K was going to hold. And no, that was 80,000 was going to hold before now. But we're seeing deep in the green at this point, a big 5% jump for Bitcoin. Ethereum still holding on to $3,000, 3.64%. We see just a few pockets of red at this point, a couple of stable coins in there showing that traders are trying to get back into the market there. Did this fall to extreme fear, that sentiment in the market, showing that investors were getting quite jittery there? Let's bring in Rume Ofi now, financial market analyst. Hello, Rume.
Good afternoon, Larry.
Good afternoon, Rume. So we're seeing green on the screen at this point with the big scare from last week, but it seems Bitcoin is just matching what we're seeing with global indexes at this point.
I think the market is just celebrating Thanksgiving. We could see that 90, 91. That could be, if that is actually holding for a while now, I think it's a breath of fresh air, because right now nobody's actually certain about where the market is going. We'll see some downside in recent time in the practical bull market at 20, 25, 30% down. It's a normal thing that usually happens. So I really don't think that there should be some scare. But when we start seeing ETF companies actually that bought Bitcoin selling huge amounts, it becomes a cause for concern right now, because the essence of all of this is for them to make profits on a short term. But I think the believers of this industry are those that are buying to hold for 30, 20, 40 years, as long as it could be, because if this is the future of money, and short term shouldn't be a way to distract us from what this industry has to offer.
All right, so Ruben, there's a lot of talk about laws being set here about for cryptocurrency markets and cryptocurrency trading in Nigeria. We've also had some meetings coming from the House of Reps. They're bringing industry players to find a way to chart a course that makes sense for Nigeria, so we're not left out in this digital asset space. So what are you hearing so far? On what these laws would look like, the kind of conversations that are being had?
All right. I think for the first time, the ad hoc committee that actually called industry players to chart a course forward on this industry, it was really a good one. Kudos to all of that, those that put it together. Right there, my friend Olu Kasamani and a couple of others, Senator Hehe and the rest, that actually came in to have very solid discussion about all of these things. Fantastic. But I think where we are right now in this industry, we need to get a bill that actually concentrates on cryptocurrency transactions in this country. More like we had MiCA in Europe, where certain amount of digital asset in terms of dollarized asset should be capped, so that we don't have Naira suffer for a couple of all of these things. We just need a bill that makes sure this industry is well regulated and is suitable for players, local players, as well as international players, while putting in consideration the Naira, which is our currency here. For crying out loud, nobody spends the Naira in the US or in the UK. So we need to have or prioritize stable coins per adventure if we want to do that, or have certain threshold for amount of dollarized stable coin that could be in circulation, so that could be tracked. So we need a law. There's no law in this country of parliament that actually, not just for recognition of crypto now, we have to talk about just crypto laws that talked about that address cryptocurrencies, there's no law that address cryptocurrency in its purest form. We can go down the nitty-gritty of it. We don't have laws that actually address stable coins. We need to go down on all of that. We need to talk about all of these things. And who is going to do all of this is the players in this industry. Understand all of these things more than the regulators. So the collaboration between players and regulators needs to come in place, so that bill will be well robust and is being passed in the parliament, so that we can have a way forward. A lot is happening, and it's looking like Africa is a bit taking the back seat. Nigeria is supposed to lead this, and we slowing down, it makes a whole lot of it brings a lot of concern. Ghana just did something which is very fantastic, and one of the important things that is done in their rules as cryptocurrency is concerned is that there's a national law on education for the blockchain and cryptocurrency ecosystem. So it makes a lot of sense, which means the industry itself the do's and don'ts, a couple of things, the basic fundamental education is going to be taught in schools. These are the things that we are talking about year in, year out on this platform. We should do this in Nigeria too, so that the younger folks can be in line for us to have a very solid ecosystem and innovation can thrive. It's not like we'll always take the back seat when countries like Singapore, the UAE, and the US are running faster. We're not saying it's a cash-up game, but we have our uniqueness, and if we follow this trend from a long time, we would have been ahead some of these countries.
Right. All right, thank you so much, Rumi. So much, good news coming out of Ghana, at this point with the inflation rate, dropping from crazy highs, and now they've cut interest rates big, and you're talking about education in the schools there for blockchain technology. Great stuff. Thank you so much, Rumi, and thank you for joining us on short notice. Thank you.
Thank you very much, Larry. It's always a pleasure.
All right, that's the show today. These are the top stories and major markets making moves. You can watch this again on our YouTube channel, and definitely we'll keep you updated for the TGIF trade. That's tomorrow. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.